Well, good afternoon, everyone. This is Don Daniel with the P.I.L.L Method, and we're coming to you with a special broadcast about coronavirus and some of the offers that are coming to individuals because the Fed dropped the interest rate to zero, which means the overall interest rates that we're offered from the bank have come down, and now you're probably getting inundated with refinance offers, and you need to know what's going on. Everyone you know, everyone you know needs to see this. So go ahead and hit share right now. Share this right now because everybody's going to be getting these refinance offers, and you need to know what's going on. I'm going to give you, one of my clients just called me just not too long ago, 2 days ago, as a matter of fact, had several offers, and we're going to take a look at one and see why in the world that his own bank, he just got the mortgage, and his own bank is offering him a refinance at a lower interest rate. So here's a question you have to ask yourself. If I'm saving money, who would have to be losing it? Again, if I'm saving money, who would have to be losing it? Wouldn't it have to be the bank? Why is the bank calling an individual that has an interest rate a point and a half higher, calling them and say, you just got the mortgage, go ahead and refinance? We're going to take a look at that today. So take the time, go right ahead and share this information. Everybody you know who is about to refinance or even considering it needs to take a look at this video so that you can know the truth. So again, here we are with Finance Fridays. We're going to be talking about some stuff, but right now we want you to go ahead and stop by if you haven't got my book yet, go by our website. That would be pillmethod.com. And let me go ahead and share this information for you and put this on the screen, okay? Hold on. There we go. We're going to share this. There it is. There we go. All right. So there's the book. Go ahead and take a look at that. Go to pillmethod.com, and there's a special right now. You can download the first chapter for free. Just scroll down on the page and get this book. It's still going out. It's still selling very well. A lot of people all over the country are talking about it. We've got some really good reviews. So get the book. If you don't get the book, at least download the first chapter. You get that for free. So let's get right into this right now. What's going on with the Federal Reserve dropping the interest rates so that people can, that these refinance offers, you're going to be getting phone calls, you're going to be getting mail, and everybody is going to say, listen, we're trying to help you here by saving you money. And I need you to understand that banks are necessary for us to do what we need to do, but they're not service organizations. Banks are businesses, and they're not in the business of saving you money. We need to be educated on what is really going on with mortgages and with refinancing. And if you're educated, you will do well. And so here was the question. The question was, Don, if I refinance my loan of $420,000 and I get a point and a half lower, and I lower I'm going to lower my payment by $300. Is that going to be a good deal for me and my family? I said, I don't know. I don't, because it's a math problem. And when there's a math problem, you can't tell from looking at it. You have to do the math. And so we put it into the P.I.L.L method, opportunity cost calculator. And then we looked at one of the indicators is this is how much interest you have left to pay. This is how much interest you have left to pay with the new mortgage. But let's get into some of the very things that the bank is hoping you never see. So let me go ahead and put this on the screen and we'll get into it. All right, so there we go. Put that on. All right. Okay, so let me share this. And there we are. Okay, so now here's the first thing. I said, do you know what your fees are on the loan? It says, no, not really. I know that I get a 1.5 lower and we get a really good interest rate of 3.375 and I'm saving money overall, $300 a month, a little over $300 a month. Now, folks, $300 a month, that's $3,600 a year. That's a lot of money to save. So why is the bank trying to save this guy $3,600 a year when he has him locked in to a higher interest rate? Why call him? So here's an example. Let's say you, I don't know, you sell furniture or you sell cars and you sell some furniture this year and then because of something happening in your business, you call all of your customers next year and say, you know what? You know that furniture I sold you last year? Here's what we're going to do. Because things have changed in my business, we're going to renegotiate the contract and now I'm going to sell it to you for a lesser price. Has anybody ever called you and said, we're going to sell you that furniture, that car, that television set, whatever it is, because business has changed, we're going to sell you the same thing that you have for a lesser price. Banking is the only place that I know that can have a higher interest rate and your same bank will call you and ask you if you want a lower interest rate trying to save you money. So here's what's happening. They're sending out mailers. If you're in business, mailers are expensive. They're hiring people to call you. And those salaries are expensive. They're putting out commercials. Commercials are expensive. So they're spending all of this money so that you can save money so that they can lose money? I don't think so. And neither should you. You should ask that question. If my bank is calling me to give me a lower interest rate, why are they doing that? They had me at the higher one. So let's take a look at this thing. Let's see what's going on. So first of all, I asked, what is your new amount that you're going to be borrowing? And the new amount is $437,000. And let me make this just a tad bit bigger on your screen here. And let's see here. There we go. All right, $437,000. So guess what? The old mortgage was right around just under $420,000, $419,000 and change. So just the fees or just the closing fees on this refinance, $17,000. $17,000 to refinance. Let me show you what's going on here. And if you want to ask a question, let me get my phone up here. We'll get so I can see what's going on. We'll get Finance Fridays happening here. And There we go. Pill Method International. Scroll down, and I'll have my phone right there, right here, so I'll be able to see if you're asking any questions. Okay. So we've got a couple of comments here, and let me see here. Let me see. Turn that down and come back. All right. All right. So Ian Pedley is saying hello. Esther Hart is saying that she's here. Hi, Esther. Esther, I am so glad you're feeling better. So be sure to give us a call next week so we can chat a little bit. Ian, glad you're here from Australia, and I want you to see this. This is some important information. So even though my client's going to be saving some money, and $300, a little over $3,600 a year, we've got to figure out what's going on here. So let's scroll down into the summary. So $437,000. The fee is $17,000. It was right at $120,000 before. Now he's at $437,000. He's not even taking any cash out. That's just the closing fees, folks. So now this new loan at the new lower interest rate, the bank wants over 30 years, $258,505.60. $258,000 in interest on a $437,000 loan. And folks, I don't care how you slice it, that's not 3.75%. This is not 3.75% of 437,000. It's actually, look over here to the right, it's actually 59.155% of what you borrowed. So that is the first thing. You're paying a lot of interest. The second thing is you need to give us a call here at the P.I.L.L Method at 256-886-1867. And if you're getting a refinance offer, give us a call. We'll go over the offer with you and let you know if it's a good deal or not. Let's run the numbers. Let's figure it all out. Let's do the math. And let me show you what's going on here with this particular situation. So now remember, he used to have, his loan was $420,000. If he takes this refinance, it'll be starting out at $437,000. So first of all, we have to pay down the first $17,000, don't we, to get back to the $419,000 he had that he has today. So let's take a look at how we do that. Now, here's the first thing you have to realize. In the very first payment on this loan, $702.90 goes to principal, and $1,229.06 goes to interest. So this is how you have to look at it, folks, and this is what's going on. There's a $17,000 loan in here. When the bank asks you to roll the fees into the loan, they never ask you to pay it up front. Say, roll the fee into the loan. When you roll it into the loan, now you pay back $17,000. That's a $17,000 loan, isn't it? Well, look how much interest you're paying on a $17,000 loan. This is the closing fees, folks. And a lot of people don't look at the closing fees. They just say, I'm paying less money. So take a look at this. Now, we have, Demetrius, it's good to see you. Oh, look, this is wonderful. Demetrius is one of our partners who helps us with our investments, all right, here at the P.I.L.L Method, and a great business partner. Thank you, Demetrius Curry. She is the best. I'm telling you, you want to know something about IULs and the insurance business? Demetrius, top notch. Okay, so here's what we're talking about. $702.90 of the new payment goes to principal. $1,229.06 goes to interest. That means you have a $17,000 loan in this that you're paying $1,200 interest on a $17,000 loan. Here's how it works, folks. I have here for you cumulative principal and cumulative interest. So every month you pay, the principal payment is added in this column. So by trying to pay back the first $17,000, we're going to add it up for you for the first year. Look here. At the end of the first year on this mortgage, we paid back $8,566.47 of the $17,000 fee. So we haven't even paid back the whole fee yet. We haven't gotten back to the original $419,000 yet, because we're only paid down to $428,433.53 after the first year. But look at this. You paid $8,566 of the fee. How much interest have we paid in total? $14,617.05 in interest on the first $8,500. Let me ask you folks, is there any way I could talk you into borrowing $8,500 from me for a year and you pay $14,617 interest on that loan? That's exactly what's going on here. Remember, folks, go ahead and hit share right now. All of your friends need to see this right now. Mr. Shaf Muhammad, good to see you, sir. Listen, hit share right now, because people need to see what's really going on, because you're going to get inundated with all of these refinance offers. Read my book, give us a call, get a free savings report, and so that you can know the truth about your loans. So let's continue on here. So we're going to go out into the second year on this loan. It will actually take 2 years to pay back the $17,400. And look how much interest we're paying back. It's going to take you $17,426.58, and the interest on here is going to be $28,940.46. How about that? Folks, let me ask you something. If you have a $17,000 loan and you pay $17,000 interest on a $17,000 loan, isn't that 100% interest? Another $17,000 on top of that, wouldn't that be $34,000 in interest? This is at $28,000 in interest. This is almost a 200% loan, and this family has perfect credit. They're not credit challenged. They have perfect credit. They have almost an 800 credit score here. They can get 3.375 on a jumbo loan. That never happens. This is what's going on here, folks. I need you to see what's going on. Folks with perfect credit paying almost 200% interest for the next 2 years just to get back to where they are in their mortgage today. This is one of the reasons that banks offer refinancing. So listen, we put all the numbers into our program, and we figured out that if we can get a better fee, that they're going to get out of debt on their mortgage about 6 months earlier and save about $30,000 with this new interest rate. It doesn't always happen that way, but in this case, a refinance would help them. But they don't need to pay $17,000. So here's what's going to happen. Said, all right, now they're going to be out of debt in about 8 years on this mortgage, which is really great. All right. And so now they're going to be out of debt about 6 months earlier if they refinance. So it's about 7.5 years now with a refinance. So here's what you want to do. All right. A refinance like this should cost anywhere from $5,000 to $7,000, not $17,000. Okay, to close it, $5,000 to $7,000 to close. All right. So if you're getting hit with all these fees, and don't get confused, just look at what you owe now and what you would owe at closing. That will tell you what your fees are. All right. So here's what you need to do. All right. So let's say your fees are about $6,000. All right. In this case, we'll use $6,300 to close. And I say, don't pay it out of pocket. Roll the fee into the loan. Even a $6,000 loan, look at this. But what you don't want to do is pay it like this, monthly, pay the minimum monthly so that you're paying all of this interest. So here's what you do. If you have a $6,000 fee rolled into your loan, to your refinance, and we figured out that you're going to pay less interest and pay off in a little less time by doing the math. There's only one way to do this. You've got to do the math on your income, on the mortgage, on the interest rate, and our program does all of the math for you. All right. So we plug all of that in. And now what we're going to do is take $6,000 out of, once you roll it into the loan, take $6,300 out of the bank. Okay. When you make your first mortgage payment, add $6,000, about $6,000 to it. In this case, about another $5,000 to your first payment, and you're paid down to here in 1 month. So you're going to knock out about 8 payments in 1 month by prepaying about $5,000 extra dollars with your mortgage payment, and that will save you right around $10,989.93 minus the $1,229 on the first line. So you get to pay your mortgage all the way down to this line here, line 9, not for $10,989.93 interest, but only for $1,229.06. Folks, there are going to be a lot of offers coming at you. And here is where you do not want to get your information on if this particular refinance is good for you. Don't try to get your information from the person trying to sell you the refinance. Not good. Give us a call at the P.I.L.L Method. Give us a call here at 256 886 1867. 256 886 1867, and we'll be able to help you with this. Now, I'm not going to spend very much time on this, but I just thought I'd show you just some of the things we need to be aware of as we're sitting at home worrying about how we're going to pay the bills. If you're you don't know what the future holds, what the coronavirus is going to do to our economy. There are a lot of people that are missing work. There are businesses out there that were depending on events, the wedding business. There's businesses that do catering. If you have a place where you're having events, if you have an Airbnb, there are a lot of things that are being canceled right now that would pull a lot of money into this economy that's not going to be there now. And it could affect your particular business, which will affect your income. So don't worry. Get with someone who does this for a living, that looks at things a little bit differently, and I'll be able to help you. And all of our consultation, initial consultation, is free, and we'll be able to help you here. Okay, so come on and give us a call, and we'll be able to help you. Right now, I just wanted to say hello to everyone who is they're in the meeting right now. They're on Facebook Live. We're going to upload this to YouTube, but I just wanted to share just a little bit of what's happening with these offers. Banks are necessary. I love the bank. I have 4 mortgages, okay? But what I want you to know is if a bank is offering you a way to save money, look at it several different ways. In fact, give us a call. We'll help you to see where all the hidden fees are, where the charges are. We'll help you to see how you can borrow money at a discount. Okay? So, listen, if you want to know more about what's going on, let me put this on the screen for you as we're doing a short version today of this, and I wanted you to see that. So make sure you share this to everyone you know. And then I have other I've got other programs on YouTube. This is episode 11. Go look at the other 10, and it'll catch you up on how banking is done and how amortization actually works, and how the interest rate you're quoted is not the interest rate you pay. So let's go ahead and put this on the screen. Okay. So you'll be able to see this, and let's see, we'll go here and we'll blow this up so that you can see it. Okay. And this is what we're going to have on the screen as we say goodbye to all of you. But you can text TPM to 36260 and get our free information app. That's text the letters TPM to 36260, and you can get our free information app and start studying. Give us a call at 256-886-1867. Operators are standing by to take your call right now. This phone is answered 24/7. Go ahead and like us on Facebook. You've got to. Go to the P.I.L.L Method International Facebook page and like us. Our email here at the P.I.L.L Method is info@thepillmethod.com, and go to our website, pillmethod.com, and get there's a free offer there to download the first chapter of my book, and you'll be well on your way to understanding why in the world that your particular bank, who has you at a higher interest rate, will give you a call and say, I want to lower your interest rate by 1.5 points and save you money so we can lose money. Listen, folks, send this out to everyone. Give us a call. There's a lot more to learn. And as this coronavirus thing lingers on, it may start to affect your income. It may affect your ability to pay bills or whatever. But listen, you don't have to worry. There's someone here that can help you to see the silver lining in these clouds. Understand finances a little bit better. Look at it from a different perspective. I guarantee you this, that what you will hear from the P.I.L.L Method, you will not get from Susie Orman. You will not get it from Dave Ramsey. You will not get it from Crown Financial. You're only going to get it here because we help you to understand how an amortization schedule actually works, how banking actually charges interest, and what you can do to cut your interest costs by 75%, eliminating all of your debt in an average of 7 to 9 years, You don't have to change your budget, and you don't have to sacrifice lifestyle. Until next time, this is Don Daniel at the P.I.L.L Method. Just telling you, listen, don't worry. Just get educated on the process. We'll see you next time.